Look at all these sell absorption walls that we need to see buyers aggressively break above before we get excited about any higher prices on XRP.
All right, starting off here, of course, first with the fundamental backdrop, because you guys know that we're in an extremely fundamentally driven environment, and the fundamentals did not support, risk on sentiment at all today. So this played a big role in risk asset sentiment today, both in crypto and in futures markets, as we had a sell-off in both markets today. So starting off here, and then we'll dive into the MNQ price action, utilizing the deltas and the dark pools, and I'll break down my trade in detail for you all. Also, I'll break down why I closed my position once price showed that buyers were making an attempt to absorb some of the sellers. So, starting off here, I said today risk assets particularly remained under sustaining sell pressure, with the total market capitalization in crypto continuing to trade in the red. And then, obviously, of course, along with MNQ and the NASDAQ shedding some weight today as well. The downside move was driven by a combination of escalating geopolitical tensions between the United States and Iran. Economic data pushed, economic data that pushed back on immediate rate cut expectations and increasingly hawkish commentary from Federal Reserve officials ahead of the upcoming FOMC meeting in minutes, which is tomorrow. At the center of the market volatility is the rapidly intensifying situation between the US and Iran. Recent, geez Louise, Recent headlines have significantly raised the stakes with Iran's Islamic Revolutionary Guard Corps, warning that if the U.S. crosses its red lines or targets civilian infrastructure, it will respond beyond the region and potentially disrupt global oil and gas supply for years. So this conflict seems like there has been no end in sight. I mean, honest to God, if Trump does attack civilian infrastructure, it's going to be against the Geneva Convention, and in my personal opinion, will cause a complete global spiral of other jurisdictions getting involved in stuff. So this is going to be very important over the next 24 to 48 hours. At the same time, rhetoric from President Donald Trump, if you guys haven't seen these headlines, are just freaking insane. Like, I'm laughing a little bit, but it's honestly crazy that this dude just like can go outright and say that he has the ability to wipe out an entire civilization and just not even think twice about, like what he's saying. It's like nuts. But the rhetoric with Donald Trump has escalated sharply with the deadline set for the full reopening of the Strait of Hormuz. Trump issued a strong warning signaling severe consequences if Iran fails to comply. Reports of infrastructure strikes inside Iran, alongside warnings from Israel and rising tensions across the region, have only added to the uncertainty. The geopolitical response has also created division domestically within the United States, with lawmakers voicing strong opposition to further escalation and warning of broader global consequences. As markets move into the Asia session, headline risk will remain the primary driver. If escalation continues, particularly in the form of direct attacks on infrastructure or expanding military involvement, the reaction across global markets could be severe. Increased demand for safe haven assets, like the dollar, higher oil prices, and rising inflation expectations would likely weigh further on risk assets. On the other hand, any informed or confirmed ceasefire, diplomatic progress, or agreement between the U.S. and Iran, as we would need to see confirmation on the Iranian front as well, not just rumors from the U.S., that could act as a catalyst for a possible relief rally. Given the sustained selling pressure that we saw today, even a short-term de-escalation could trigger a meaningful bounce in risk sentiment. So just be mindful of that as we head into the Asia session, trading hours. Today's economic data. So on the U.S. data front, as we did have ADP, we had consumer goods, we had durable goods orders. Today's economic data presented a mixed but important signal for markets, particularly in shaping expectations around Federal Reserve policy. The labor market component showed some resilience, with ADP employment rising to 26,000 from a previous reading of 15.3 thousand, indicating a modest improvement in hiring activity. This pushes back slightly against the narrative of rapidly cooling labor market figures. At the same time, core durable goods orders came in stronger than expected at 0.8% versus a previous reading of 0.5% and 0.3% prior, highlighting continued strength in the underlying business investment. So neither of these data reports today supported rate cut bets. However, the strength was not broad-based. Headline durable goods orders declined sharply to negative 1.4, which was worse than the market was expecting and the prior readings, pointing to weakness in overall demand. Adding to this economic optimism, The economic optimism readings fell from 42.8 from a previous rating of 47.5, reinforcing the idea that sentiment across the global economy is deteriorating. Taken together, the data reflects an economy that is not collapsing but is clearly losing momentum. This type of environment complicates the Fed's path forward, and we know that the markets, I misspelled two words here, and we know that the markets, especially risk assets, do not react well to uncertainty. All right. So when we see mixed data that doesn't paint a clear forward guidance for the Federal Reserve to stem off of, that's not good for risk assets. On top of the Iran and the US data that we've seen pushing back on market sentiment, we also saw over the past 24 hours commentary from multiple Fed speakers, which both lean notably hawkish, further weighing on market sentiment ahead of the FOMC meeting in minutes release that we're set to get tomorrow at 1 p.m. Cleveland Fed President Beth Hammack and Chicago Fed President Austin Goolsbee both emphasized that inflation remains a larger concern than employment data right now. Their stance reflects growing caution around easing policy too soon, especially as geopolitical tensions, particularly the Iran conflict, threaten to push energy prices higher and reintroduce inflationary pressure into the system. And you guys can see those comments from both Fed officials here. When asked to characterize those states of the, or excuse me, the state of the economy, the tone was far from optimistic, reinforcing the idea that policymakers are not yet comfortable pivoting towards rate cuts, which we know does not support risk sentiment. This message does little to support market expectations for near-term easing and instead reinforces the higher for longer narrative in the short term. Despite the hawkish tone, the overall picture still points to a Federal Reserve that remains in a wait-and-see mode, which is good if we can get the data later on this year that supports rate cut bets. The resilience in labor data and core economic activity reduces the urgency right now for immediate rate cuts. However, the visible cracks in headline demand and weakening sentiment ensure that cuts are not fully off the table yet. They are simply being pushed further out. In order to see rate cut bets come back to the table, we will be looking for clear confirmation that inflation is cooling sustainably, or that economic weakness, particularly in the labor market, is broadening before repricing rate cut expectations more aggressively. And we do have some key inflationary metrics to be mindful of later on this week. As we move through the remainder of New York session and into Asia trading session hours, markets will remain highly sensitive to geopolitical headlines. Any developments surrounding the Iran war, whether escalation or de-escalation, will likely dictate the short-term direction. Looking ahead, the focus shifts squarely towards the upcoming FOMC meeting in minutes, again, that we're going to get tomorrow. While a major shift in tone is unlikely, that's personally what I'm projecting, markets will be closely analyzing any language around inflation risks, geopolitical uncertainty, and the policy outlook moving forward. If the Fed maintains flexibility and signals that rate cuts are still possible later this year, it could provide some support to risk assets. However, if the tone leans more hawkish or emphasizes prolonged uncertainty, it may continue to weigh on sentiment and extend the current downside pressure and risk assets. Right now, markets are navigating a complex intersection of geopolitical risks, mixed economic data, and uncertain monetary policy. The direction from here will not be driven by a single factor, but by how these factors evolve together. So that is why we're seeing continued sell pressure in the markets today. We haven't seen anything, not the data, not the Fed rhetoric, not the geopolitical tensions and the woes. We obviously, of course, have tariff uncertainty still lingering in the background and other major central banks like the Bank of Japan hinting at a more hawkish leaning environment moving forward. None of those things support a risk on environment. And so that is being reflected in both futures and crypto today.
Previously breaking down it and kind of show you guys how the same exact patterns that we look for in this community on MNQ or gold or whatever, you can, as a day trader or just as a dollar cost averager, see these things on XRP. And so, this will just position us amongst the vast majority of retail traders that are, constantly feeding into this bullish scenario all the time on crypto and instead really teach you guys detailed technical analysis by utilizing these deltas, these dark pools, and paying attention to price action at these key areas of interest that we highlight. So in our last update from August 5th, right, we had broken down in detail using the order flow where we mentioned that sellers were trapping buyers at $1.34. That was our last update, and we had mentioned that $1.34 needed to be broken in order for us to get excited of any higher prices on XRP. Well, since then, if we come over into the XRP analysis section, I gave you guys just some updated screenshots on the order flow from today, Well, we did not see any aggressive price action above $1.34, and instead we constantly are still seeing $1.34 retested. Buyers keep getting trapped. As we can see, there's massive amounts of buy volume sitting at $1.34, and then we just see bearish candlesticks following that, which just shows that buyers are clearly getting trapped at $1.34. This is the 4 hour time frame. You can see it a little bit more in detail. You can see that buyers made an attempt to defend around $1.27 here at this low. They became aggressive enough to break a resistance here in this area, and they made it all the way up until about $1.36, where right here at this sell wall, you can see a huge buy volume, a support thrown up, a trapped buyer, as we can see that in the bearish candlestick with buy volume. And then following the trapped buyer and the bearish candlestick, we see aggressive sell volume and it breaks the support. And this all happened right after the trap of buyers, aggressive sellers breaking support, and then a resistance thrown up happened at exactly $1.34. So, like, even if you don't have the order flow, we still have the deltas and the dark pools in this community. So, looking at this price action, you can see $1.34 and you can see where all of this happened at. That's this move right here. So prior to that, what took place? A sell delta held pattern. So what I want to show you guys is how you could have caught this sell position on XRP right here by using the deltas, the dark pools, and just the delta held patterns that we go over in this community. So looking at price action prior to this initial bearish push, which as of right now is slightly being absorbed by buyers, and they're simply just defending the previous base here. I mentioned to you guys that if this base fails to hold in the chat, as we have a nice little arrow here, you can see the buy volume being thrown up. This is absorption, or these are buyers making an attempt to absorb sellers. If we see these buy volume walls broken, be prepared for a buy squeeze, or all of the buyer stop losses beneath these lows will likely turn into more sell volume, and we'll probably see price come back down into $1.27 or possibly even lower. If buyers are able to defend these levels, then we could see it act as a support and we could start to see price presume its, attempt to break these sell walls and possibly go higher. But we know that we have higher levels that we need to be mindful of. Look at all these sell absorption walls that we need to see buyers aggressively break above before we get excited about any higher prices on XRP. With the highest sell absorption wall right now coming in at $1.45 on the 4 hour time frame. So we know in this community, before we get excited about any higher prices, we at least need to see buyers trade above $1.45 and turn these previous sell walls into support before we believe any bullish moon boy hopium or hype on the internet, right? And it's just crazy that most retail traders, they don't have access to this information. So that was really good to see. Coming over here, all right, looking at how we could have caught this sell position. First, we have buyers that got trapped at highs, as we can see here by previous sell bases, acting as a resistance, where we have the last up candle before the down move that broke support here in this area. That was retested by buyers. Sellers prevailed, trapped those buyers, passively defending them, and pushing price back to the downside, breaking supports again. Same thing, buyers made an attempt above $1.34. And every single time buyers broke above $1.34, once $1.34 was retested, it failed to act as a support and take price higher. So with that being said, the last massive bearish move between $1.34 dark pool and $1.27 dark pool was this A to B move, or this new bearish leg. Because since this bearish push to the downside into the $1.27 dark pool from $1.34, we have not seen any bullish price action above it. And so right now, this is the bearish leg in which we are currently operating in, from A to B. And now what you'll see is that this was the start, prior to this move, of a sell delta held pattern, where we can see previous supports violated. Here is your 1. Here is your 2. And if you were to take a fib, since we're on the 4 hour time frame, from the high down to the low, You can see that price comes straight up. You cannot make this up. Straight up into the 79% discount or premium that we like to highlight utilizing our fib, or at least the way that I have my fib set up. And so now, seeing this on the higher time frame, that this is a sell delta held pattern, which we go over in the Discord in the Delta Education section. Now that prices come up into a higher time frame area of interest or into this sell base from the one here, the last up candle before the down move. Now that prices come up into this sell base, yes, this is on the 4-hour time frame. Remember that because as we jump down to the lower time frame, I'm going to show you how the sell delta held pattern also played out in this area on the lower time frame during London and New York session. So now we'll go down to the 15-minute time frame. We'll turn on the session indicators. And again, mind you, remember that this area is the one from all the way over here that broke all this previous bullish structure and created a new A to B move from literally dark pool to dark pool. Now, as price came up into this area of interest on the 15-minute time frame, we can again see an aggressive attempt during New York session by buyers to defend the dark pool at $1.34, which they did for some time. But immediately following that, as we rolled over into New York session, we now see a shift in momentum where previous supports are broken. Following the break of these supports, we see lower highs formed and more supports broken. Then following that, we see a violation of the triple moving average. This, we have to assume, is enough momentum because remember, whenever we see the break of a 50 EMA, we know that it costs a lot of money to do that. So this now bearish move is very important to us, right? Because we know that it broke previous supports and it violated a triple moving average after an initial bullish push trading above a dark pool. So this now becomes our new bearish leg. Highlighting the last up candle before the down move, we now have a new sell base. So this is our 4-hour sell base. We can go ahead and we can get rid of that to clear up the charts. And we know that this is now a new bearish leg that had enough sell volume in it to break previous support and break the 50 EMA. So now this becomes a very key area of interest where if sellers are going to continue with this pressure, price cannot break back above the sell, excuse me, the sell wall. And so sure enough, now we have a new delta held pattern where we have a high that breaks support, creating the 2 or the 1, the 2. And all that was left for you to do to catch this trade, considering that price is in a higher time frame premium, we know that the market sentiment from the beginning of the call today via the fundamental backdrop over the last 24 to 48 hours has been risk off. So you use that analysis as well. And you're sitting there saying to yourself, 4-hour sell delta held pattern, market sentiment skewed to the downside, risk off. And now on the lower time frames, we're also seeing a sell delta held pattern where even if you did not catch this pullback taking your fib, and I can eye this, I can see that this pullback is going to hit the 79% discount watch. High to low, 79% to the absolute freaking T. If you didn't catch this first entry, that's okay because bearish confirmation came right after, where we see the triple moving average crossover, this new A to B move, or another lower high that breaks previous support and creates a new leg to the downside. This now becomes your new base. Buyers should not break above that. You see here at the dark pool, $1.34, look at how accurate this price action is. You see buyers make an attempt to push above, and they fail and immediately get met by sell volume. Now we have a previous support acting as a resistance, and it's happening right at the dark pool. So as soon as you started to see buyers failing to push above the triple moving average, fail to push into the sell wall, and fail to create bullish order flow above the dark pool, this is where for your second position, if you didn't execute a trade at the first entry, you could have placed a sell stop right underneath of bullish candlesticks And you get to take in these XRP shorts rolling into Asia session. Stop loss safely above the previous high, nice and tight above the most local lower high. And simply you could have targeted either the next dark pool to the downside, which is $1.27, or the previous buy base, which comes in right here where we had the previous triple moving average crossover on the 15-minute time frame. So these patterns play out across all asset classes, including XRP. This was a phenomenal sell delta held from the higher time frame, the 4 hour, where we had this A to B move, tracking this one as your sell base area, seeing price come up into it, and then start to create sell delta held patterns on the 15-minute time frame. Super clutch price action on XRP. The person that asked me that was just interested in starting to day trade XRP, which I think if you're patient and you don't expect huge volume spikes like you do see on a NASDAQ or MNQ, then it is a very good pair to trade, day trade. If you're very patient and you execute positions to and from these dark pools and these deltas. So I just thought that I'd break that down for you guys today, as this price action was super clean on XRP, and it just goes to show that if you read thoroughly through this Delta education section and you've gone through the CYPRX 2.0 content, that you can apply this information to any asset class across the board, including crypto, specifically pairs like XRP, as the vast majority of us, I feel like, probably are interested in XRP's price action, right? So that's all that I wanted to break down for you guys just real quick. I wanted to share that delta held pattern with you guys and show you all just the level of accuracy that we've been trading with for some time in this community, from delta to delta, dark pool to dark pool. These levels are a must-have. Crazy to me that people aren't flocking to this community for access to this type of information. But again, some people don't believe it exists. Here we are, right?
They gotta wake up.
They gotta wake up. You would assume, right? But that's not the case. Actually, as a matter of fact, that's the complete opposite. When you tell people, at least the resistance that I've met, when you tell people that you have access to information and data that nobody else on the internet has access to, it's like they don't believe you. It's like, "Psha, bullshit. Yeah, right. It's here if you want it, but you gotta want it, you know? That's the thing. That's the difference between you guys and everybody else is you guys want it. You have to want it. If you don't want it for yourself, nobody can want it for you, you know?